Hey, so I'm back. Because I have to look at Grab anyway, I'm going to let you guys watch kind of the process, but I'm going to go really quickly. I'm not going to be as detailed as I was in the QUBT video. But so 2 days ago, a stock bro of mine said you should look at Grab. And I'm like, I've never heard of Grab. And I honestly immediately thought this must be a Chinese company. And when I came over and looked, I'm looking for at this point, I'm not really looking for fundamentals. I'm not looking to be an investor. I kind of just want to know what it is. And so I'm reading this and you can go check it out for yourself. But as I'm reading it, I'm thinking, this they do everything. They do financial services, they do telemedicine, they do mobility. And my first snap judgment about this stock was this is Amazon. This is literally Chinese Amazon. And I know some of you have heard me say that before. But anyway, let's get into the chart. And this is if I'm looking to be a trader. It was a top mover probably a day or two ago. And the reason I'm doing this now is because we're going to not have extended market data in about 13 minutes. And I have an alarm that goes off at 7:45 because I want to look at the tail end of this. I do this every day anyway, um, when I'm on top of my game. And so let's just see. Grab is down 18% after hours, but today it moved 3.66%. That's fair. So let's do the top-down analysis deal. What I'm going to do is I will do something for shorter term traders. I like to do swing trades and leaps at this point, but we'll do the top-down analysis using three lower time frames. So I'll do 4 hour, 1 hour, 15 minutes. Um, to me, we missed a lot of significant price action already, which I don't really like, but hey, start with the fib. No. And what I did not tell you guys in the last video is how to find exits. And so I will go into the fib in more detail in future videos, but the easiest way is once you cross the zero, so you create the move, you draw your fib top to bottom. Um, it retraced right into the 50. That's significant. As a follow-up to the previous video, that is significant if you watched the previous video. If you didn't, you should. I talked a lot about the significance of the point 0.5 or the 50 on the Fibonacci. I talked about how you don't want to trade, you don't want to buy above that, but you can buy at it or near it. And so we created, pretend we were here, right? And all of that stuff to the right of that hadn't happened yet. You got a high and a low, and you got a significant retrace. And so that is a move to me. That is a Fibonacci worthy move. So I draw my fib from the lowest point of this candle to the highest point of that candle. And now, if you watch the previous video, you know I'm just waiting for a retrace into my 14 and 21 moving averages. And I will look for confluence if it's at or near the 50 because I don't really want to be a buyer. You can. You make a lot less profit that way, but I prefer to be a buyer below the 50, worst case scenario, at or near the 50. And so with where we are now, I can only be hoping for um I shouldn't say that. If it retraced into here, that would be wonderful. The 886 is just beautiful, and I'll show you more examples of that. But right now, we got a trade off the 50 moving average. And so our confluence here is I've told you that you wanted to be touching all up in the 14 and 21 moving average with it, which it is. It's also you have we'll call it the second confluence, which is it's at the 50. Let's look at what the stochastic was doing when it did that retrace. it is not oversold, but what is significant about the stochastic is it went from bearish conditions, the lines crossed, and it went into bullish conditions. So if you watched the last video, and again, if you didn't, you should, I'm going to put a line on my bullish side for the stochastic. And remember, we're talking about here. We'll talk about here, but right now, just pretend we're here. The stochastic is switching bullish. So I'm going to put a line on the bullish side of the chart. We have traded into the 14, the 21, and the 50. And when I say 50, I mean the 50 on the Fibonacci. So I'm going to make a mark on the bullish side for my moving average indicator, and I'll make a third for the fact that it is at the 50. If I were trading on this chart, I would get in on this candle, but you guys would probably get in on this candle or maybe even this candle. But remember, we are not entering on this chart. This is our highest time frame chart. This is where we get our trend from. Remember, on this chart, if you are above the 200 moving average, is bullish. If the price is below the 200 moving average, it is considered bearish. So for the purpose of our top-down analysis, we know that we are working with a bullish trend, and therefore we are not buying puts under any circumstances. Don't let any level of FOMO or anything make you buy a put when price is above the 200 moving average. So we got 2 more time frames to go. I want this to be a short video, so let's go. Going to just refresh it to kind of reset the candles. And we're in here. This is where we were just looking at on our 4-hour candle. And so you got this move, you got to retrace into these moving averages. I would have bought here. I would have been completely comfortable with this. But remember, we're not entering here. The only thing we're doing on this chart is looking for confirmation before we dial it down to the 15 to look for our entry. And so we can only deal with what's going on back here because for the purposes of this training or this video, none of this has happened yet. You got to pretend like none of this is here. All we got is from here back, basically. And so let's start with our stochastic. Stochastic is overbought. And it is, let's blow it out. It is kind of giving us bullish signals. We get across here. We know from the last video that I told you that means that you're going to get a retrace, which is okay. We know that we're in a bullish trend based on our highest time frame. You should expect retraces. In fact, you should relish them because that's what gives you your entry. And so I'm not even going to make a mark for this because it's really insignificant. I won't put a bullish mark. As a matter of fact, I'll put a mark on the bearish side. So we got 3 on the bullish side, 1 on the bearish side. What are our moving averages doing? Remember, I told you green, yellow, red is bullish. Yellow, red, green is bearish. What I would do if I were you, I would get me a Post-it note and I would write that down and I would stick it right on the side of my computer when I'm trading, like right at the top of my screen. So I'll put my moving averages are saying that this is bullish. But remember, we have to dial it down to a lower time frame and look for our entry. What else do I want to say about this? It's obvious that we would have big green volume candles because you got big green price action candles. But hopefully I'm not going too fast for you guys. If I am, go back and watch the previous video twice and then come back here. But this is legit how I do my analysis. I can analyze a chart, figure out what I want to do, find my entry point in like 3 minutes at this point. So I'm just going to, and I'm going to go at this pace. If you feel like I'm going too fast, let me know. But I'm going to go at this pace because this is just a realistic pace. So I'm going to drop down. I don't use the 15, so it's not up here. But I'm going to drop down to the 15 because I know some of you guys have not yet acquired the taste for higher time frame charts. But if you're using 4 hour, 1 hour, 15, and you want to be in and out of this trade in a day or 2 days, maybe by the end of the week, you're going to use the 15 for your entry. Let me find first where we were. We are at basically the open on November the 12th is where we want to look. Way back here. It's beautiful. It's just look at this. It's beautiful. And so we know we are in bullish conditions based on our highest time frame, the 4 hour chart. We know that this was resistance, and so we expected it to consolidate and probably retrace here. But we want to retrace because we want to buy low and sell high. And so just what I've said you expect to happen is happening. You get the consolidation at the zero Fibonacci, which these lines, the Fibonacci lines for me, just act as support and resistance. Remember I said you want this time frame, you're not so much paying attention to the moving averages. We were done with those on our middle time frame. So don't pay attention to these, but I keep mentioning the 50. And so what we see, it's like clockwork. I can show you this on 10 other charts. It retraces into the 50. And then if you're the type of person that waits for a confirmation candle at 9 o'clock in pre-market, you get a significant confirmation candle, a large candle. This is your open. And this candle is confusing. I have told people in the past, and I'll probably find that training and make it public again. Don't enter on that first candle because you are likely to get wrecked. Have some patience. Let me blow it up a little bit. Have some patience. Don't enter in the first 15 minutes. See what develops. But perhaps by the second candle, the second 15-minute candle, you'll get another retrace into your 50. I suggest that you don't wait for it to come all the way back or wick all the way back up here. What I suggest you do is what I was taught to do is you enter on red candles. So when this candle was red before this wick printed, I'm trained to enter down here. And then you set a stop loss. You don't get wrecked. But this is our support. So at worst case, it's going to come to here and it may wick below it, but this is your support. It should not trade below here. If it trades below the 200 moving average, cancel everything, abandon ship, abort mission. But you can enter here. You can enter when this second candle closes. The 9:30 candle closes at 9:45. You enter here and you're golden for the rest of the day. And I'll show you over the course of the next several weeks or perhaps even the next several months how this is just typical. At this time of day, this is going to happen. And it happens on Tesla, it happens on Apple. All of these charts have their own patterns that they follow, but this is typical. You get a half a day run, then it pulls back and tries to scare you out, and then it may consolidate. But we know that we have a long-term bullish trend. So let's look and see what happened. I need to go up a little higher so we can see more price action. But we know we were just at the 12th. So in theory, you entered on half of this candle because this is two 15-minute candles. So you entered on the second half of this candle and then you got a nice move. Some of you probably would have jumped out there. But if you had waited, if you had been patient, if you had a long enough expiration date, you would have experienced this. And after hours, it loves that 50. It would have retraced back to that. And if you have a short contract, you open at the 50. I told you it happens. It happened there when we were looking at the 15, and the same thing happened here. It came in at the open, it retraced to the 50, it went up. You got about a half a day or to a third of a day worth of movement in your direction. Then it pulled back to try to scare you out, and then it consolidated. But what I want to zoom out and show you is that all it is to eat up. This is time decay. This is time decay. This is time decay. That's why my contract would be like March or April. But so just to show you if you can be patient, if you can sit through all of this and remember everything I said and pay attention to your higher time frames, don't get scared out by the 15-minute or the 5-minute. Pay attention to the higher time frames. You would have taken this trade. Where's the 12th? Would have taken this trade from approximately $4.82 to $5.54, which is pretty significant if you're at the money. And how to identify, just quickly and easily identify exits using the Fibonacci. Your first profit target is the 0.5. Your second profit target, if you're aggressive and you got a long enough expiration date, is the 1. I will say get out there if you're new, if this is new to you, get out there. But there is a 2 up there. We'll talk about that. But your first profit target, particularly if you have a short contract, is the negative 0.50. I would call it an extreme price target, or exit would be the -1 at 603. And I would say that I'm not in this trade. I just got introduced to this stock 2 days ago, if it wasn't yesterday. I would at least hold to the 1. And if I wanted to hold to the 2, I would be looking at fundamentals and news and see if anything supports that thesis of holding to $7.02. But something tells me that there's some fundamentals that do support holding it that long. And so hopefully this helps. I look forward to hearing your feedback. And again, join the Facebook group if you have questions. There are, at this point, probably about 10 professionals, people who I respect as traders in there. And so you can ask questions of any of them. We have futures traders, forex traders, crypto traders. And I look forward to seeing you in the group.